The challenges they have is that the unemployment rate is so low, and there's been very little wage pressure. That's something that's quite unusual. Something we're seeing in many other countries also, with very low unemployment rates and inflation not nearly as high as traditionally we would see in those situations. So I think there may be some fundamental structural changes that are going on, and that makes the Fed's job particularly difficult, because is this time different, or is it just the same thing and it's just going to take a few more months to see?
Do you think it's different? Do you think we're in a different realm now?
So I think there's some differences, and I think some of that we see is because of some changes in the labor market that you were describing. I think there are also changes in the way people think about pricing, because today it's now so easy for people to compare prices. It used to be very easy for someone to raise prices, and some people might know, but not everybody else. Now you raise prices, everybody looks on the internet, and they know that you're the outlier, so it makes it more difficult to raise prices.
But I've seen you say that you think the market expectations around inflation are probably understated. I mean, that people should actually be thinking a little harder about where the potential for inflation to emerge in the system is. So can I ask you, what do you think the right natural rate is on interest rates, given that you think 3% is possibly too low on the 10-year?
So I think, well, there's the short-term neutral rate that for the Fed, and then so the longer rate for the 10-year rate that the markets would be determining. It seems reasonable that at this point you'd start to see both the short and the long rate moving up a bit, and so that long rate is either telling us that there's very low inflation expectations, and I don't see a big spike in inflation, but I think having some worry that there could be a little bit more inflation pressure seems reasonable to me. It could also be saying that the markets are worried that in the intermediate to longer run we're not going to see as much growth, although I don't really see much other evidence of that. If you look around to the way the equity markets are, if you look at the way around to where various forecasts are, you don't really see that. So that suggests that markets are very sanguine about inflation. I don't think that's crazy, but I think it's a little bit less, it puts less weight on the risk that there could be higher inflation than I would put on.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.